So we're going to look at QuickBooks for lawyers. So, or you can probably call it QuickBooks for law firm. So, one important thing we'll be looking at in this video basically is trust accounting for law firm and attorney. This is very important. So, if you're a lawyer, you run a law firm, or you're an attorney, this video will help you understand QuickBooks for your business. So let's look at the outline and what we'll be discussing in this video guide. So we're going to look at how to set up QuickBooks for a chart of account in QuickBooks for a law firm and also trust fund. So how the chart of account look for you. Then we'll talk about how to add clients and their receivables. Maybe as at the time you're setting up your account in QuickBooks, you have clients that are yet to pay you for legal services rendered. So we'll look at that and then how to set up your trust account for each client and interest earned on that client. This is very important. So how do you set up trust account? And then how do you map trust account to each of the clients that owns account with you. And then we'll also discuss how to add your bank account. So it's very important we discuss that, how to add a bank account. Now, when you manage trust fund on behalf of a client, it's important for you to have a dedicated bank account for all trust funds. So you can't miss trust fund account and also your bank account together. So I'll show you how to map your trust funds to the relevant bank account, and then how to add your vendors and then their payable balances, how to set up divisions or categorize your law firm. So if you run a growing law firm that actually requires you to understand or provide their legal services in different area or different segments, maybe corporate law, property law, criminal law, constitutional law, intellectual property, oil and gas, and all that. So I will also discuss how to divide or how to categorize your business into departments. And then how do you track revenue from legal fees and professional charges? How do you create an invoice for professional services rendered? How do you receive payment and also record deposits? How do you record inflows into that trust account? And then how do you tie it to the client that paid that money? How do you liquidate client trust accounts? And then either part payment on request or full. And then how do you track direct costs, maybe acquisition of legal materials and construction of legal library, court related expenses, let's say hostage and stationaries or transport, the cost of transport to the court and back. And then how do you track billable expenses charged to the client? How do you record business expenses? And then we'll be looking at banking transactions where we'll talk about checks, transfer of funds, how do you reconcile your accounts, financial reports. We'll look at income, expenses, your profit or loss by department or service type, your trial balance, balance sheet, and also your cash flow. So let's quickly launch our QuickBooks to demonstrate each of the outline that we've shared right here. So first, we're looking at an account for a law firm. So we set up a demo account called Macbeth and Co, which is a law firm. So you look at this dashboard, you see that we have a lot of things we don't need right here. So let me quickly show you how to customize each of these dashboard to reflect the ones you want, the ones you don't actually need. So if you look at this right here, do we really need purchase order? Do we receive inventory? So if your law firm requires you to manage inventories of books, maybe like you own a library and you want to track the books you have in your library, you probably need to leave this inventory visible on your dashboard. So, but if you don't, you can take that out. If you have to send a quotation to a client or customer for your legal services, what's the cost like? Then you have to leave a quotation. But if it requires you to send an invoice directly, you do that. But I noticed that most law firms have to send a quote to their clients before they can engage them. So you probably need to leave the estimate, which we call quotation, and then you create an invoice, you receive payments, and that's all. And then we have the statement charges, we have refund. If your law firm refund customer maybe for unsuccessful services, or successful court cases, or there are situations where the law firm might probably have a caveat and say, when you make full payment, if the case becomes a success, we're going to we recognize that amount as our income. But if it's not a success, we'll probably fund you 50%, and the 50% covers the cost of the services. So if you do such, then there will be need for you to have refund and credit. But if you don't, you can take that out. So how do you take out the items you don't need? You go to edit, you click on preferences, you select desktop view, and then company preference. This will display all the information you need on your dashboard. So you can probably come here. Let's assume we want to turn off sales tax and sales order. I'll come here. I'll then you see enable sales order. So that means it's already off. So that's why we don't have sales order right here. So let's take out sales tax too. Go to edit, preference, desktop view, company preference. You can see this is off, so you can take it out. So if you don't want payroll, you can also click on this and say no payroll, and then you click on OK. So you turn payroll off too. So you might probably have to turn off every other items that you don't need on this dashboard. But if the ones you need, you can leave there. Like I said, you only leave this inventory if you have books, maybe library, you have documents, probably legal related materials that you buy, magazine, and then that you want to track in store, so your library. So that's why you need to leave inventory. So the first thing you need to look at when you are setting up your book as a lawyer or a law firm is to ensure that your chart of account actually reflects your line of business. So when we were creating this company, we selected chart of account. We selected law firm. So that's why we have chart of account that is related to your line of business. You can see we have client trust accounts. So we help you to track all the money received in respect of trust. And then you have your advanced client court costs. We have expert witness fees. You have filing fees. You can see them right here. And then you have the income section, which is legal fee income. So we can add every other direct costs on the system. So let's look at the outline right here. So you can add you have acquisition of legal materials, construction of legal library. So we can come here and say accounts, new. So this is going to be a direct cost because it's tied to our business. So you can say construction, construction of library for construction of library. So you can leave that and then go back here again. So let's look at our outline. Um, Yes, I think that's pretty much the chart of accounts. So you can then go back to this QuickBooks. Let's look at the liability side of the system. You will notice here that we don't have a major liability sitting right here. So what are we going to do? For me, this client trust account, I'm not going to select the bank as the account type. Why? Because I want to specify the name of the bank. So I won't be right to quickly call a bank name client trust account. So here I will call this Citibank. Then I can indicate client trust account. So that tells me that we have an account with Citibank dedicated to client trust account. Now, when you receive money from this client, it's not your money, even though it's going to your bank. So we need to have a liability to track client trust fund. So you come here, you can call this client trust fund, and then it is a liability. You click on OK. So this is very, very important. So every money you receive into your client trust account at Citibank, they automatically have their second leg posted at client trust fund because they are not your money. So for keeping their money, it's a liability to you. So that's why you need to track that as client trust funds. Very, very important. So you need to take note of this part. And then again, another liability we have is the interest earned on client trust fund. So we're going to add this. Why? The interest accrued on that account, interest earned on client trust account. You click on OK. So this is what happens too. When you put money in client trust fund account, as it continues to earn interest, you have interest on client trust fund accounts. You have that. So there are kind of legal pronouncement or legal backing, or let me say, there are kind of law behind interest earned on client trust funds. Some actually allows the law firm to own that interest because it's their money. They are the one because they are the one managing the money, so to say, and then whatever interest that is earned on that account become their own. So that's actually their income. So which means that this interest earned will not be a liability to be treated as an income. Other law requires that the interest be paid to the client because it's actually their money. So whichever one applies to you, just know how to treat them when you are actually recording interest earned on client trust account. So let's move on to the other part. So how do you add your client and their receivable balances? So you go to your customer center. So your customer center is where you manage your customers and the receivable balances. On the customer center, you are able to add a new customer, you're able to edit an existing customer. So you go to new, you select new customer. So if you have a client called Mr. Smith Oil and Gas, so you add the name of the client right here. So let's say this is a corporate client. You click on OK. So this customer center, this is where you add all your clients. So you can come here, okay, Miss Jane Smart. You add right here. So and then this is where you add all your customers. So as at the time or the date we're setting up our QuickBooks, so let's assume that there is a company that owes a certain amount of money. So we have to select the date, which is the opening balance, and then impute the amount they owe us. So this means that at the time we're setting up our account on QuickBooks, this company owes us 345,000 USD. So you click OK. So this is how you set up your customers on the system and their receivable balances. For customer without a balance, you're going to leave it at zero. For customers with a balance, you make sure you input the amount they owe you. If it's a customer that has a credit with you, advance payment, under the balance, you input negative, meaning that if you come back here to add your customer, so you can call here hands on limited. So if this customer had paid us advance for legal services that is yet to be rendered, rather than putting the amount as 950, which is the amount they paid us, this assumes that they are owing us, which is not right. You're going to enter negative. So negative tells you that they have a credit with you as at the day you're setting up your book, meaning that they've paid us or we're here to render that legal service. So that's why it's a credit. It should be recognized as a credit in the book until that service is rendered. So we have that here. So let's look at the other thing on the outline. So we've talked about how to add our bank account on the system. So let's add our bank accounts. We go to list chart of accounts and then click on new bank. So this you call it Chase Bank. This is Chase Bank, and then you enter the opening balance in that account. And click on OK. Save and close. Now, there's a difference between this Chase Bank and Citibank. The Chase Bank is like your operation account where you receive money, you make payments. Now, you can also have an account dedicated to expenses. Then you have the one dedicated to income, or you can actually dedicate one bank account. But most importantly, you don't mix the account for your client trust accounts for together with the one for operation. So that is not acceptable. That does not make sense. So make sure you have a dedicated account for trust, and then you have another account for your operation, maybe inflows, expenses. You can have the same account to manage inflows and expenses, but you can't use one account to manage trust while also using that account to manage your business operation, because you might end up spending the money without knowing. So you must dedicate one account as client trust account. So we have that set up on the system. So the next part is we've discussed how to set up trust account for each client and also interest earned. We've added that on the chart of account. How do you add your vendors and their payable balances? So your vendors are your product suppliers and also service providers. So to add your vendor, you go to vendor right here, and then this is where you manage all your vendor information. You click new vendor. So here you add your vendor. So let's say um, you have this legal, you have this company that's in charge of constructing library. So legal library service provider. So let's say these guys are actually engaged in construction of legal library and any other services as it relates to that service. Then you can impute the amount that is payable to them as at 31st. So this balances here refers to any amount that is still outstanding or that is still payable to your vendor as at the time you're setting up that book. So whenever you're adding your vendor, make sure you enter that payable balance if any. But if there's no payable balance, you can leave it at zero, and then you fill in every other relevant information like the address, phone number, contact, or whatever. So you have this setup here. So your vendors are service providers. You can as well add different service providers right here. So you have ABC technician. So ABC technician is engaged in service of probably fixing the AC the office. So you have that here, and then you click on OK. So you can add different vendors to the system. The same way you add your customer, that's how you add your vendor. There's no significant difference. Then you have um, your divisions and categories. Now, as a law firm, you might want to categorize your operation to different departments. So here you go to list. You notice that there is no class here. So we use class to categorize our business. So how do we activate class? You go to edit, you select preferences, and then accounting, company preference, you use class tracking. So class tracking will help us categorize our business into different segments in such a way that anytime we create an invoice, we can actually select the department that that invoice is connected to. So, so I'm going to remove this here, and then let's look at different classes. So we have corporate law. So what's divided our business into departments. So we have corporate law. Then click on OK. We have property law. Click on OK. So we have oil and gas law. So the essence of this oil and gas department, the essence of this is to divide your legal services or law firm into different categories in such a way that when you render services to clients in any of this category, you are able to map that invoice or expenses to this department. So we've done corporate law, criminal law, oil and gas law, property law, and then any other department that you want to track as a law firm. So the essence is that you can generate profit or loss by class. So just by activating that class feature. So when I create an invoice, I can map it to a class. When I incur an expenses, I can also map it to a class. Then how do you track revenue from legal services? So here we want to enter revenue. How do we make money as a law firm or attorney? So you go to item lists. So you already see here we have consulting. So go to item and then services. You can call this legal advisory service. So we have legal advisory services, we have legal services, depending on what you call it. And then this becomes an income. It goes to legal fee income. You click OK. Now there's one other important one you need to add, which is client trust accounts. So client trusts fund. You also receive money from client trust fund. But when this money comes in, you don't treat that as an income. It's not an income. So it goes to a liability account called client trust fund account. You can see here, it goes to client trust fund account because it's not your money. So if you have services that or charges uh, for that service, you can actually add that to on the system. So you can probably be um, legal advice on client trust. So if they have to pay you to render that service, so that's where what you actually treat as legal fee income. So we have this set up already. So this just describe how your inflows will be. One is coming from client fund account, which is not an income to you, a liability. Then probably you have consulting, maybe general consulting services, legal advice on client trust. Maybe they pay you before they take up that client trust account with you. Then you have client legal advisory service. Maybe you enter legal advice on different area. Maybe it could be on the maybe corporate law, it could be on criminal law, whatever. Before they engage you, they'll have to pay you for that service. So that's how you track inflows into your legal firm. Then, how do you create an invoice for professional service rendered? How do you receive payment and record deposits? Straightforward. Now, if you're going to engage a client, you're required to send a quotation to that client. So, some business call it quotation, some call it estimate. So, let's assume that we use quotation. So, you go to customize data layout and then change this to quote. And then we change this to, so we're going to change this to quote, then click on OK. So we've changed it. So who are we sending this invoice to? You quickly come here, Mrs. Jane Smith. Now, if there are previous transactions with this particular customer, system will display it right here. But if there's none, you will leave it empty. So take note, anytime you select the customer, on the right section of your screen, system displays previous transaction if there is any. So what service are we rendering right here? We actually talking to this client on the maintaining or opening a client trust fund account with us. So go to legal advice on client trust. Before they engage us, they're going to pay us for that service. Now, if you look at this invoice, this is more or less like a product invoice. So you can switch this to a service, product quotation. You can switch this to a service quote, or you can leave it. If your charge is basically per month, you can change this quantity to per month. But if you don't need that, you go to customize data layout, you select column, and then uncheck this quantity here, and then you click on OK. So what's our charge? We charge 150,000 to maintain client trust account. So this automatically goes to your income account. That's your legal fee for that service. So we're talking to this client on maintaining a client trust fund account with us. So one, we are charging them for that service. Number one, then when you click on save and close, it be, you've you've already sent a quotation to them. So if the client is okay with it, you can then move to invoice. That's where the client is about to engage you. So you go to James Smith. You can see right here, system tells us that a quote has been sent to them before. You quickly import the value of that quote into your invoice and then click save and close. So this becomes a receivable in the name of that client. And then the next one is to receive payment from that same client. You select Mrs. James Smith right here. You can see this is the invoice value. You check this, and then but most times when we receive payment, system will require us to move to the next section, which is record deposit. But I like to combine record deposit and receive payment together in such a way that when I receive payment, I should be able to select the bank where the money was paid into. So I'll quickly come to edit preferences, and then I'll click on payment. What happens is that anytime we receive payment, the system takes the money to an undeposited account by default, and that is not right because at the point of receiving payment, we don't have an account called undeposited funds. We have an actual bank account, so that's why I will need to uncheck this and click OK. So when I receive payment, I have a room to select the bank where the money was paid into. If you don't uncheck that, whenever you receive payment, the money goes to undeposited fund account. You would have to go to record deposit. So most cases I've seen clients end their transaction and receive payment level with thinking that they've received the money. So if I go back to receive payment now, I'll then select the name of the client, click on this. You can see that we now have deposit to. So the money goes to undeposited fund account, which is the default account. But we don't want to receive the money into this account. We know where it's going to. This is like an unidentified account. They paid you money, you don't know the account where the money was paid into. But if we can identify the bank where the money was paid into, why leave it as undeposited fund? So we're going to select Chase Bank. You're not going to select Citibank because Citibank is designed to manage your client trust account. So you're going to select Chase Bank, which is dedicated account for all your business operation, and then you click on OK. So that's how you've received the money into that account. If I go to banking, use register, and I select Chase Bank, click OK, you will see on your bank statement that your Chase Bank has increased by the amount received. So now while we're still talking to this client and they've paid us for that legal services, tomorrow they now said, okay, we want to maintain a trust account with you. How do we get started on that trust account? I'll go to edit and then preference. I want to check first. You need to check what we need to record the receipt or inflows into our trust account. We need to use the sales receipt to do that, not invoice. When you create an invoice, it becomes a receivable in the name of that client. So, but it's not a credit transaction. So the client is not going to tell you, I'm going to pay money tomorrow into my trust account and then please record it. No, you are only recording actual inflow into that trust account. So you go to edit, preferences, desktop view. So we're going to activate our sales receipt. This is what we need to record inflows into that client trust account. It's a cash transaction. We're recording them as the money is coming in real time. So it's not like we're going to be recording future transaction. So we have our sales receipt. So sales receipt is designed to receive all the money into that client trust account. So it might probably look like sales receipts, meaning that you might be thinking, but we're not a product-based business, we're not selling anything. We can change the name from sales receipts into fund inflow or cash inflow. I call it cash inflow, or you can say client trust account. So depending on whatever you want to call it. If you want to dedicate it to client trust account, you can come here. You can say client trust, and then you click on OK. Click on OK again. So client trust. So who is paying the money into the client trust account? This is Jane Smith. She has started talking to us. She has paid for legal service. Now under the item, we're going to select client trust fund. Now this client trust fund account is tied to a liability account. So as we receive the money, automatically it increases the client trust fund account as a liability, and it also increases the client trust fund account as a bank. So this is where we're going to receive the money deposit to Citibank. So the transaction inflow right here. So let's quickly customize this and then take out the quantity, the system, so it won't look like a product-based invoice or receipt. So you can actually customize this. We can do a proper customization of your receipts. So if you go to layout designer, so here we can do, so you can see we can do a proper customization from start to finish. So that's what you need to know about the forms in QuickBooks, both the desktop for the invoice on the desktop and also the receipt. So here we have client trust accounts. So here you can say being payment into client trust account. So How much are we receiving into that amount? We're receiving 14 million to their account. So this is what you need to record the client trust account. So the entries for this transaction will be that our bank account dedicated to client trust will increase by this amount, and then a liability account in the name of this client will also be opened automatically. So you don't expect this to be an income. It's not your money. It's money you're managing or money you're actually holding or that's in your own custody on behalf of a client, pending when they will issue instruction on how that business will be run. So you can also have another class called client trusts. So we didn't add this. So both the income and revenue that are tied to client trust, you can have them right here. So this is related to client trust. You click on OK. So what happened is that if we go to our report and then we select our balance sheet right here, so you can see that on our balance sheet, our client trust account at Citibank has increased to 14 million because we don't have much, we don't have any balance there before. And then you can see your liability under client trust fund has also increased. So that money is not your money. So you don't treat that as an income, it's a liability. And if there's any interest income earned on that account, you go to company, you select journal entries. So that would be your interests earned on client trust account and also your client trust account as a bank. City Bank. So this will be credited. So let's say we have interest of 140,000 and then we have 140,000 too. So what's the name? We're going to map this to the same client right here. We're going to map this to the same client and then the class is related to client trust. And this is related to client trust. So this is how you recognize interest earned on that account. So you're going to debit the bank account receiving the money, and then you're going to credit interest earned on client trust account. So this assumes that the money is not yours. So if by law you're supposed to give the money to the client, this is how you treat it. But if it's your money, rather than setting up your interest earned on client trust as liability, you're going to set it up as an income. They have the same balance, which is a credit balance. So you click on save and close. If you go to reports, go to companies and financials, and then select our balance sheets. Let's see what's happening. You can see that the Citibank account has increased to 14.1, and then our liability has also increased. You can see client fund account is 14, and then interest earned on our account is 140. You can see the total, which corresponds to what you have in that account. So that's how you track transactions on client trust accounts. So the scenarios again where you want to settle that client. Let's say you want to liquidate part of that money. The client is saying, okay, I want 50% of that money. I want 7 million to be paid back to me. What do you do in that scenario? You go to write check. So from which bank are we paying it? You're going to select the bank where the money is actually to reside and then pay to the order of, you can probably select the name of the customer or most importantly, the account. So this will be a client trust account as a liability. So if you're also paying part of the interest too, you're also going to be doing interest and on client trust account. So here we're paying 7 and then here we're paying 14. You can see being part liquidation of client trust account based on based on requests. And if there are documentations that are tied to this, you can come to attach file. You can attach that document. So if it's a document that connects to this particular transaction, you can as well attach it right here. So this is connected to it. So most importantly, this is what you need to select the customer uh, at this on this column. So if you don't select anything right here, it's fine. But you must select something right here whenever you are recording such transaction. And then under this trust, you can come here. So we can come here and say this is from this person I'm paying that money. So you select the name of the customer that you're paying the money to, and then you review your transaction and make sure that everything is correct. And then you click on save and close. So the balance has reduced. So if you come to report companies and financials balance sheet, you will see right here that your balance on your client trust account has reduced because you've settled them. And again, the liability too has reduced because you have settled that client. So this is how you track transaction related to that particular client. Very important. And then I can as well come to, let me check something here on customer statements. This is 14th. So let's look at this for just one client and see if we can generate a statement for this person. So you can see right here, this is this is the balance of that transaction. So let's go to reports, and then we're going to select this here. So with this now, I'm able to see a summary of all the transactions with that client. You can see the client trust account right here for Mrs. Jane Smart. Can you see? Then you can see the amount they paid in, and then the part liquidation. So a summary of your transaction will be displayed right here, and then you can see the interest earned on that account. So this will show you summary of all the accounts and then what took place in that account, what the inflow was like, the outflows, and then the date of the transaction. So it's like a summary of all that happened in each of your ledger accounts. Then we've talked about this. How do you record inflow to trust account and tie it to client records? We discussed that. How do you liquidate part of full payment? We discussed that. Acquisition of legal materials. So let's assume again that you have inventories. So you can come to item. So if you have inventories of books, you can come here and then item, new, inventory parts. So inventory parts is what you use to track your book. So you can call this legal materials or legal dictionary, depending on what you call it. And then what is the cost per unit? Enter the cost. How many of these items do you have in store? You enter the quantity and then you map it to a legal fee. So the essence of this is that you are able to see the quantity of all the legal materials you have in store when you generate a report. If I go to report and I click on inventory report, you can see here legal materials, which is 300. At what cost? 12,000. You can see the value. So you're able to track all the materials you have in library as a law firm. So, and then if you have materials, magazines, or books that are very important to you, you can also use the inventory section to manage that. And then we have billable expenses charged to clients. So let's look at these billable expenses. So if I go to write check and then I impute, let's assume we have research expenses. Let's go to edit preference. So let's see if we can quickly activate this one here. Yes, yes. Track reimbursed expenses as income. So let's come here. Okay. So now I'm incurring an expenses of 150,000 USD in research expenses, which I'm expecting to invoice this client on. So let's say I'm going to invoice this guy for that service. So I can click billable expenses. If I uncheck here, it means that it's not going to be billable. Billable means that once I finish incurring these expenses, I can create an invoice for it. So let's look at our settings for the billable expenses to be sure that we are correct. So look at this. So we want to charge 5% markup. So whenever we incur expenses for this client, we're going to charge 5% markup, and then it goes to billable income. So we call this billable income. So billable income will help us track all the income we've actually earned for helping the client to make payment or for incurring billable expenses. You can track reimbursed expenses as an income. You click OK. So when you incur that expenses, make sure you check billable. And what is this tailored to? Oil and gas. So we're actually researching maybe certain transaction, certain issues in that um, department. Maybe we have a case to handle for this client, and then we want to quickly look at how that case was handled in the past, so we can start incurring expenses on it. So every expense we incur, we can bill it back to this particular client. So that's what we call billable expenses. When you incur that expenses, it's not gone. You actually incur that expenses on behalf of the client. You click save and close. So here we can come to invoice and say invoice for time and expenses. So you can see this is the billable expenses we have incurred. So this will display all the billable expenses that we're supposed to invoice the client for. So you select this and then click on create invoice. So you can see right here. Now remember we added 5% as a markup, which is our income. So that's why the system is multiplying 5% to that billable expenses. And then you can click on save and close. So when you click on save and close, so let's map this to his account, save and close. So why do I have to email this to the clients? I've marked this form to be emailed. Um, I think I marked this form to be emailed. So let's look at what we've done somewhere that would have prompted these settings. List, edit, preferences, time and expenses. So mark all entries as billable. Create this. So email later. So let's just say at gmail.com. Okay, so we've converted that billable expenses into an invoice. So if you go to reports, companies and financials, profit or loss, you can see these are billable income of 7,500. So that's the income portion of that money. We've incurred our expenses. Now we are recovering the money with a markup of. So what the system is going to recognize as an income is the 5% of that expenses, and you can see the legal fee that we earned earlier from another client. So you come here again, let's check. So we have record business expenses. So if you incur normal expenses as a legal firm, you can come here, you select write check, you select the bank where the money is coming from. Like I said, the money has to come from your operation account, not your client trust account. You only dedicate client trust account to receive and pay clients for trust related transaction. But for your office operation, you have to select another bank, and then this is where you select the expenses that you are incurring, enter the amount of that expenses. If that expenses is tailored to, let's say, continue education, so if this is tailored to, let's say, this particular client, you can map it to trust account. Let's say you are actually spending money to understand the business of trust very well as a law firm. So you can do this and then click on save and close. If it's a credit expenses, you use enter bill. With enter bill, you can only enter expenses that have not been paid in hope that they'll be paid later. So that's the expense side of the system. Then under banking, we're looking at transfer funds from one account to another account. So you can see here. Now, if some clients are saying, can you take whatever fee you're going to charge me from my client trust account? I already maintain a client trust account with you. Can you take that money there? So you can effect fund transfer from that account into your bank account. But first, you have to create a bill to the to show that there's a payable or there's a receivable from that client. You have to create an invoice to show that there's a receivable from that client. And then when you're about to receive the money, you make sure you settle that money from your client trust account by using a journal entry. So for the journal entry, you have to um, um, raise journal entry against your receivable. So meaning that the account receivable will have to be credited and then the bank will be debited with the value of that client trust account. So I hope this information is enough for you to understand everything, majorly how to use QuickBooks for your law firm and also your client trust account. Now, the report side of the system show you pretty much everything you need to know about the business. You have the profit and loss, you have your balance sheet, you have your statement of cash flow showing you how you are actually spending and raising money. You can see statement of cash flow right here, and then you can generate, if you see your balance sheet, you can also generate your company snapshot, which gives you an overview, an idea of how your business is doing. Here you see your income and expense trend, previous year income comparison, customers who owe you money, previous year expense comparison, top customers by sales, and every other information. So there are over 3 to 400 reports that you can generate from this system, even the one you customize as a law firm. So I hope this video is able to help you understand the business of law firm, the trust accounting, and then how to treat trust funds in QuickBooks. And if it's the first time you're actually watching this video, you can quickly turn on the notification, click the subscription button. And if you have another industry or a business that you want me to discuss, or you have a question on how we can set up QuickBooks for your law firm, you can actually use the description below to go to our website, and then from our website you will always find our contact there, and then we also have our number so that you